And crude oil prices make a comeback. Hello traders, this is Fawad Razakzada, market analyst for City Index. Expectations that crude oil supply will exceed demand growth in the months ahead owing to the OPEC plus production hikes and record US crude oil output have weighed on crude prices in recent months. And we have seen a bearish trend emerge ever since prices peaked in June. But is that trend now starting to turn back to positive? Well, looking at the daily chart of WTI, price action has not exactly been bearish, one would argue, in recent weeks. And there are tentative signs that we could possibly see a recovery in oil prices, but more confirmation is needed before we turn decisively bullish. Let's have a look. Well, WTI has been consolidating inside what looks to be a bull flag-like pattern in the last several days. It rallied away from this massive area of support between 55 to 56, touched the top of that range at 56 on 20th of October, and it rallied away from there. But since then, momentum has been lost and prices have been consolidating inside this bull flag pattern. And today, it looks like WTI is poking its head above the resistance trend of this pattern. So let's see if WTI will be able to post a decisive close out of this bull flag pattern and whether it can hold its own above the $60 level, which is a very important level. So this level has been tested on a couple of occasions in the last few days. It initially provided some support before prices broke below it, but then there was a lack of downside follow through since it broke below it. And consequently, the sellers have taken profit by the looks of it, and this has caused prices to climb back above the $60 level, which is interesting to note. So there is a possibility that we are looking at a market which is turning back to bullish, but more price action is needed to confirm that. And for as long as the series of lower lows and lower highs remain intact, we will have to take it from one level to the next and reassess the situation. So from here, where can oil prices go? Well, the next level of potential resistance is at around 62, which is this level right here, a level that has been tested previously, offering lots of support during the month of September and even in August before we start to break below it, and now we are holding below that level. So that level is the first and immediate target for the bulls. Above that, this shaded gray area between 63.60 to 64.95, which is basically where the 200-day moving average comes into play, and also the lows from 2023 and 2024 converge there as well, making it a massive technical zone. So that area is more of a longer-term resistance zone, and we could potentially see oil prices resume its slide from there, should we get there in the first place. But if we see a potential rally above that zone as well, then that could be very interesting to note. We'll cross that bridge if and when we get there, but for the time being, let's just focus on recent price action and this $60 level, which is very important to watch. Can WTI break out of this zone today? Similar to WTI oil prices, Brent crude is also trying to break out of a bull flag pattern after prices have been showing some sign of a recovery in recent days. Let's see if it will be able to climb out of this bull flag pattern and whether it can then go on to break through key resistance seen between $65 to $66, the shaded orange area where previously Brent oil had found significant support and resistance from. So it will need to break through that region and hold above it for me to turn bullish on Brent oil. In terms of support levels, 64.25 marking the highs from the previous few days is an important level to watch now, given that we're above those highs. Below that, 63.40 is the next potential level of support. Last week's low comes in at 62.77, making that the line in the sand insofar as the short term is concerned. But it's interesting to note that the $60 level, a very important, psychologically important level, has held for the time being after prices tried to break through that area in the third week of October. But prices bounced nicely from there before finding resistance where the sellers needed to step in really between that $65 to $66 level. But the subsequent formation of this potential bull flag pattern means that there is a possibility that oil prices are now gearing up for a potential upside breakout. For more market insights and updates, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.